Turkish economy grew 7.4% in 2017 compared to a year earlier. That's mainly due to a surge in spending by the government and households, which make up around two-thirds of the economy. Its growth in the last quarter of 2017 reached 7.3% year-on-year. That is less than the record 11.1% expansion in the third quarter. That was Turkey's fastest growth rate in 6 years. GDP at current prices climbed 19% to more than $850 billion. But the rapid expansion has raised concerns over rising inflation and a widening current account deficit, which stood at $47 billion last year. That is around 5.5% of GDP. Dr. Emine Nur Gunay is joining us now from Ankara. She's an economist and a member of parliament with Turkey's ruling AK Party. Dr. Nur Gunay, wonderful to have you on Money Talks once again. So let's talk about the top line growth numbers for a second. They are still strong, but there are some underlying fiscal problems. We can't deny that. Inflation is one. The lira recently went above 4 to the dollar. Foreign currency reserves have been under pressure as well. Meanwhile, foreign currency debts are also rather high. And all of this while interest rates in the US are going up. What is the government doing to deal with these challenges?
Okay, thank you for having me. And yes, we reached the highest growth rate among the G20 economies and second high GDP growth rate among OECD countries. So we believe that it will continue. But on the other hand, as you mentioned, of course, we have some problems. The double-digit inflation rate, double-digit unemployment rate, and current account deficit are the main structural problems for our economy. But of course, we are doing our best to tackle all these problems. For example, for financing the current account deficit, we introduced a series of reforms through the parliament. And we believe that for the ease of doing index, now Turkey ranks 60th, but next year and coming years, it will be among the first 30 countries. And for example, just to give you an idea about the new regulations that the government introduced, we will introduce the improvement of business environment with 67 articles with subtitles. So it will improve the business environment in Turkey. It means that we will attract more foreign investment, and it will be a better environment for both foreign and domestic investors. So even for 2017, for example, due to several geopolitical risks, struggle with several terror groups, we received almost $11 billion foreign direct investment. So this is how we finance the current account deficit. But the main problem is that, of course, we have to realize our structural reforms. One of them is reducing the dependency on imports, for example. We are also introducing some regulations for this.
Okay. Dr. Nur Gunay, you mentioned quite a few reforms there. The government has also been working on measures to reduce the risks associated with the high levels of foreign currency debt in the corporate sector.
Right.
Tell us a little bit more about how those initiatives are going, and how concerned are you about the level of foreign currency debt in the corporate sector?
Okay, let me start from the second question. First of all, the worst is over. We have to realize that there are both global and internal or domestic developments for Turkey or for Turkish lira. For the global developments, as all we know, last week Fed raised interest rates in the United States, and there are still ongoing concerns about the trade wars between China and the US. And there are huge drops in technological stocks. And on the other hand, the US growth rate reached to 2.9%, which strengthens the dollar. So these are the global effects that will affect all the countries, especially the emerging countries, including Turkey. On the other hand, Turkey is struggling with terror and geopolitical risk. And as I mentioned before, we have some structural problems too. But the worst is over. 4 is the psychological level for the Turkish lira, and it is over. And we will continue to attract foreign direct investment and portfolio investment for the coming months and years. And I would like to also introduce another project, One Road, One Belt project with China. With this project, we are, there will be some projects which includes infrastructure projects. It will amount like $900 billion. So please, let's remember that Turkey is a trade corridor and energy corridor, and it will continue to attract both portfolio investment and foreign direct investment. Yes, reserves has already gone 8%, but it is manageable.
Okay, Dr. Emine Nur Gunay, I'm very sorry to have to leave it there, but that is a very interesting discussion. We will have to pick up on the One Road, One Belt initiative that Turkey is being involved in our next discussion. Thank you very much indeed.
Thank you for having me.